Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back everybody. Let's take a look at the technical picture on euro currency. So this week we've got a lot of different statistics. In first glance, the non-farm payrolls was actually more or less positive, so it shows some rising of the payrolls numbers according to expectation. Inflation, unemployment staying approximately at the same levels. But in today's weekly report, we have trying to dig a bit deeper overall ongoing processes that stands right now in the United States economy. So we have found few moments that mostly confirms our idea that currently, in general, Fed is trying to hide the reality, and it uses the cash on a United States Treasury account to disguise the falling demand for bonds, for United States bonds. So we have brought some statistics in the report and shown that actually the bond market stands very near to collapse. So it has really big difficulties currently. But Fed actually has enough cash to support markets. We suggest that it should be enough to until autumn. Maybe even they could try to extend it until the November elections. But when the cash starts to exhausting, these problems will become evident. So we're really skeptical on any talks that interest rates should be rising of the interest rates should be stopped very soon. So Fed will take the pause. It should be lead to normalizing of the inflation. Hardly this will happen. So if you would like to know the details, as usual, just read the weekly report. On the technical side, despite its negative situation stands in the economy, in the short term, we do not exclude the chance that the pullback here will be a bit stronger. So as we said previously, it might be the two-leg extension on the daily chart. There's a few reasons. First of all, market actually with these lows has hit the major monthly OP target. And for the monthly chart, this is very small response. So usually it shows a bit greater response. Second, on the weekly chart, market is rebounding out of the weekly oversold. And in general, if you'll take a look at the weekly chart, if we could use the 2-week time frame when the single candle stands for 2 weeks, you could see the two-leg actually big bullish engulfing pattern. So if you'll take a look at the weekly chart, just try to surplus these two candles and that two candles, and you will see one big candle down and one big candle up. So this potentially on a 2-weekly chart, it might look like the bullish engulfing. This also makes us think that we could get a bit deeper upward continuation. So supposedly to 110 area, and in general currently all trend stands bullish. On the weekly trend, on weekly chart, trend has turned bullish this week. Daily trend stands bullish, and well, currently we do not see signs that could cancel this possible second leg of retracement. Currently we still keep it on the table. So those of you who would like to take the position with this upward continuation, currently you do not need to do something. You just need to wait for a pullback here. It will be great if we will get, for instance, bullish grabber around this area. So you just need to see the retracement. So it's nothing that you should do. But some tricky moments stands on the intraday charts. Especially it will be important for those of you who would like to trade on the intraday charts, despite in what direction you would like to trade. So on the 4-hour time frame chart, first question is about the same hand shoulders, right? So numbers was relatively good. It means that in general it's supportive of the United States dollars, just because as we have the good data from this on the economy, it means that currently we have no bad negative impact from the Fed policy on the economy. It means that they could continue. And that's supportively for United States dollar. So the first question is, what will happen with hand and shoulders, whether it will work or not, and could we take the position with this pattern or not? And first of all, I would like to remind you that we have uncompleted XOP target right here. which is increased chances that market could show this spike up to complete the XOP, and only after that it might start the pullback. Maybe it will be not the hand and shoulders, some different pattern. But anyway, this target, this is the risk for any bearish position. It means that currently, if you would like to short position, you will have to take it in consideration. So you will have to place initial stop somewhere above the XOP. But in this case, if you calculate your target where it might be, the current position, if you'll take it right here, it will give you, well, arguable risk-reward ratio. So maybe your target will be somewhere around 618 support or slightly deeper if market will complete this ABCD pattern, right? So your risk-reward will be approximately 1-to-1, which is not very attractive from that standpoint of view. That's why in the current environment, since in general we have the, well, potentially bullish longer-term view, especially if you'll take a look again at the 10-year treasury bonds, if you take a look what happens on the non-farm payrolls release, it's just minor spike up, complete the harmony with this left arm and the pullback. So potentially head and shoulders still stands on the table. Any downward action here, support will be negative for United States dollar and support reversal on the EUR. So it could mean that we could actually get the downward action. So that's why currently I would wait a bit with this position taken if you'd like to go short and trying to, well, take it when the market will hit the XOP. Besides, on the lower time frame, if we'll take a look at, we talked about this on Friday. Here we have the opposite pattern. This is reverse head and shoulders, right? So when following this pattern, some kind of the ABCD to the upside leads us directly to completion of the XOP. This is another risk factor for the bears, because this head and shoulders hasn't failed and it still could work, and this is another reason to wait with the taking scalp short position. Now the second question for the bulls who trade on intraday charts. But what about this pattern? Whether it's ready to start, and could we take the position right here for suggesting upward continuation? Well, here with this performance around the confluence, yes, indeed, when the market hits the predefined level that we discussed, it shows nice pullback, but then return it back up. In general, if you'll take a look carefully, you will see that here actually we have a kind of the pennant pattern that is forming here, right? So you could see this triangle, type of the triangle consolidation. It means that potentially it might be as a butterfly pattern to the downside, something of this kind. Variance extensions. And calculation of this A, B, C top D pattern also leads you precisely to 107. This is, by the way, also will be the 50% level. So in current environment, for position taking, I would suggest two ways of action. So either to split the position, as usually I recommend when you feel uncomfortable trying to catch the proper point for position taking. Just split your position, take the 30% on Monday right there. If market will drop to 107, take the second part. It's around 107. So that gives you the, on average, really good entry, and you will not have the headache where to take the position. Or as a conservative approach, just do nothing and wait when the market will hit this 106.85, 107 area, complete this butterfly. That gives you the confidence for position taking. It will be safer, and also control two charts. First of all is a daily grabber. If we get the bullish grabber here, this will be additional pattern that provides you confidence with the possible taking long position. And keep an eye on the follow diagram chart here, guys. We also could get the grabber. And take a look at the MACD predictor. You will see that here is also might be the grabber very soon. So just control what's going on the high time frames. Watching for the retracement. So that's actually how you could deal. Maybe you with this situation, maybe you will find some other ways to act. That will be just great. If you will find some other solutions for the current situation. It's approximately the same story we have from the Great British Pound. Here's we have the same head and shoulders to the downside. That could give the ABCD pattern, but on the fall time frame chart, we have the same reverse hand shoulders as well. It's the same as on interest rates. So currently, as you can see, the bullish context for a possible second extension to the upside is not cancelled and it still stands on the table. So this is our view on euro currency. Let's see what we get in the next week.